Hi, welcome back. Today is the 9th of February 2021 and I'm going to do some trade today. So that's why there is this video, and today I just want to compare between cash secured put and a covered call, which is better. When we are doing a option view strategy, we always start with selling a put. And when we are assigned, we turn to sell a covered call. But between these two, which one is actually better? And let us take a comparison. And I'm going to use a stock which is the symbol UAVS. This is actually a drone company, and there's some news going on. They have taken over some company, and there may be a contract with Amazon going on. So if the deal is true, then there's a potential for this stock to kick off. If not, it may stay here. And there's some positive news going on this stock. But I'm not going into the analysis of this stock. I'm just going to focus on the option strategy. So let me take a comparison. If I were to do this stock by using the option view strategy, so the first thing I will do is to look to sell a put. So if I'm selling a $10 strike put, and assuming I can get it at the mid price of 65 cents, and this is a 2 weeks option, that fulfill the criteria of 1% a week, because if I can get it at 65 cents, that is about 6% for 2 weeks return. I think that is a great return. But let us do a comparison. So if I were to sell the cash secured put, the 10 strike, and I collect 65 cents, then my average price for this UAVS, if it's dropped, will be $9.35. And if the stock stay above $10, then I will get to make 65 cents or 6.5% return. That is not bad. I mean, considering that you can get 6.5% return in just 10 days. So I think this is a great opportunity. But let's take a look at the other side. Instead of doing a cash secured put, what if I do a covered call? And let's assume that I start to buy this stock at the market price, and I just assume that the market is at 11.55. If I were to buy the stock at 11.55 and I look to sell a call option at, let's say, the 15 strike for $1.07. If I were to buy this stock at 11.55, sell the 15 call and collect $1.07, then my average price is $10.48. As compared to the outright selling a cash secured put, my average price is much higher by $1 plus. But what if the stock were to go up to above $15? How much would I make? Then I will get to make $15 minus $10.48. And I will get to make $4.52. And that is a 45.2% return. In just 10 days, if the stock were to go up to above 15, of course, the stock may not move above 15 in 10 days period, because the last high was seen about 2 to 3 weeks back at $15.10. But even if the stock don't go above $15, by next Friday on the 19th of February, because that is where the option expire. If the stock is below 15, then by the time come, I can look to sell another call. Maybe a 15 call or a 12.5 call, depending on where the stock is at next Friday or after this option has expired. And that could bring the buying price lower. So when we compare a cash secured put and a covered call, the cash secured put has a limited return. I'm not saying that this return is no good, but the covered call will give a much better return, and that is how you have a exponential growth opportunity when you do a covered call. So sometimes when I sell a cash secure put, I wanted to be assigned the share, because when I assign the share, then I can turn around and sell a covered call at a much higher strike, and that is where the chance of exponential growth come in. Of course, if you really want a 200-300% or 500% return, then you can't be selling a call, because whenever you sell a call, you cap your return. I usually start the position with selling a cash secured put, but in this case here, let me just do one trade by buying the stock, because this is only a $11 stock. But of course, this is a very speculative play, so I'm not going to buy a lot of contract on it. I will just buy 100 share. And so I'm done at 11.57 for a 100 share, and I will turn around and sell a call at the 15 strike, and I think I can only go for 1.05. And let me just update the trade. So this is the updated price, because I buy the stock at 11.57, I sell a 15 call and collect $1.05. So my average price is $10.52. My max return is $4.48 if the stock is above 15 call, and that will give me a 44.8% return. I don't think this stock can go to $15 by next Friday, but anything can happen in the stock market, and if it go above 15, that's great. But if it go below 15, then I would sell another call on it. So this is one of the stock that I start the position with a covered call instead of a cash secured put. But which is really better, I think, is up to individual. If you want a safer, then you start with a cash secured put, because if you want safety, then a cash secured put will bring your average price to lower. Then the stock would have to fall below $9.35 for you to start losing money. Whereas in this example, I do a covered call. Once the stock fall below $10.52, I start to lose money. But on the return side, the cash secure put is limited to 65 cents. I always mention that even though it is only 65 cents or $65, but that is a great return considering that you are putting only $1,000 risk on the market for 10 days and you get a 6.5% return. All these small value add up. But by doing a covered call, then I can max out my max return to $4.48. Of course, I can choose to sell a 17.5 call or 12.5 call then all this will be different. But I set up 15 calls so that I can give the stock a little bit more room to run. And so that's all for today's video, because I'm doing a video to compare between a cash secure put and a covered call. So which is better? Let me know in the comments. And if you want to connect with me, you can connect with me on the Facebook group. I'm very active in 2 Facebook groups, and I will just post it in the description below. So this is the Facebook group that I'm active in, stock market option trading wheel strategy. And the other group that I'm active in will be option wheel strategy. So if you want to catch me on Facebook, just join these 2 groups and you can ask me anything you want. If you like the video, please subscribe to my channel to get the latest information and share the video. Thank you.